Crypto.
If you mean crypto like Bitcoin, I've always said it's a fraud.
No hope for it.
Well, if they think they're a currency, there's no hope for it. It's a Ponzi scheme. It's a public, decentralized Ponzi.
And we saw you weighing in on Twitter over the weekend when I think a lot of folks were trying to figure out what was going on. We've seen Bitcoin fall since that weekend and effectively stay where it is, despite where equity markets are. So trying to understand sort of these price movements.
Well, I wish I could understand the price moves myself. I think where I'm coming from is a little bit of longer term as opposed to just the week-to-week or day-to-day price movements. I think the point I'm trying to make is that Bitcoin is on an adoption curve. If you go back to Web 1, Bitcoin is sort of in the 1999 point in the spectrum. And so just imagine where we went from Web 1 to where we are today. And so my point is you won't see this be a inflation hedge or a store of value, as other pundits are saying, until you get over 1 billion users. And so right now, it's going to be way more volatile than people like, and people look at it as a risk-on or risk-off trade until we get to that adoption curve. That's my point. Well, I mean, look, you could get shocks like wars, and you could get, God forbid, a terrorist calamity or something like that could take Bitcoin down 10 or 15%. But I think you have a heavy bid on Bitcoin because of the demand from the ETFs and from the eventual drivers of things like the wirehouses that will enter the space, as well as the 401k market. So I don't think you have 50% downside, but you could have 10 or 15% downside just because it's still a risk-on, risk-off asset. But long-term, with the halving coming this week, Andrew, right, I think this thing trades to $170,000, possibly to $200,000. And that's consistent with where it's been over the 15 years of Bitcoin.
You want to say how this behaves or what does it typically do under different environments? I just looked at a chart yesterday. Since June 30th of last year, Bitcoin has been beat for beat with NVIDIA stock. Okay, I mean, nobody's saying it's exactly the same thing, but it sort of moves along this, hey, we're investing in this big picture future. This seems to be a way to play it. The other piece of it is, if the analogy is 1999 and Web 1.0, what was the central asset that you would have bought in 1999? Bandwidth? That's done nothing but gone down in value. Like, what's the thing you're investing in?
If you bought, okay, let's use Amazon as an example. Okay, right. And I think this is the point that Andrew is trying to make: is this risk on or risk off? Well, in 1999, Amazon was an emerging stock on an emerging technology, and it was quite volatile. And you lost 20 to 50% 8 times in Amazon.
You at one point lost 80%.
Yeah, that one time in March of 2020, it went down 80%. But if you held Amazon over that period of time, $10,000 is worth a little over $14 million today. And so Amazon is now trading consistently with the volatility of the overall S&P 500, and it certainly wasn't
also
doing
producing cash flow.
25 years. If we go through a dot-com bust in the broader market in the next year or two, I think you'll have a price shock in Bitcoin consistent with a dot-com bust. However, if you're willing to hold that asset, which we are over a rolling 4-year period of time, no one has ever lost money in Bitcoin. But if you're willing to hold the asset for, let's say, 5 years, John, I think you do very, very well in the asset. It doesn't have cash flow. Gold doesn't have cash flow. But it does have cash flow in a weird way, because if you treat it like cash, cash can offer you a yield in the bank. And even though we had these problems with things like BlockFi during the crash, you could go to places like Galaxy, which is in my opinion, a tremendously undervalued asset, probably the most undervalued asset in the crypto space, and you could get yield in a borrowing agreement there. So you do have cash flow on Bitcoin if you think about it that way. And so long term, I predict people will do very well. And I think that the point I was trying to make to Andrew through Twitter and here on the show is that, yeah, sure, it's 14 years old, but it's still very young in terms of the adoption. $20 billion now, just using rough numbers, and the asset's got a $1.4 trillion in market capitalization. And let's say it went up 5x from that, and let's say the market capitalization didn't move, it's still less than 10% of the overall ownership of Bitcoin. So this whole notion that the ETFs are going to overly centralize Bitcoin, I don't buy. I think what the ETFs are, though, is they're a great conduit for people that are used to buying them.
Does the ETF create more price discovery? I mean, in some ways, you think it should create more price discovery, which in some
ways, it obviously has, though, Andrew. Look, I mean, I think we were
Well, but in the initial stages, the discovery will always be about adoption, so it should go up. The question is, long term, does it create a sort of different sense of discovery? And you also have to think that the people who own Bitcoin today were always true believers, right? It was sort of a special cohort of people who sort of thought about Bitcoin in an unusual way. I don't know in the future if you have a large volume of Americans owning it through ETFs, hopefully they won't all be true believers in truth. You'd want them to all think different things about it. Well, and I don't know what that means.
Well, listen, I mean, you guys have a lot of skepticism on the Des. I think the skepticism is well-founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful. And so at $1.4 trillion, could this trade to half the market capitalization of gold, where gold is $16 trillion today? We believe it can. We actually think it's going to go through the market capitalization of gold. And if you're making the point that the American owners in an ETF are not going to be enough to get it there, I disagree, because over time the acceptance regulatorily is going to allow people to put it in the portfolio. A 1% position in these global portfolios takes it there.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Jamie Dimon back at it. Bitcoin is a Ponzi scheme, but we know he's a participant in BlackRock's ETF, and then also has bought Bitcoin plenty of times. Now we have Scaramucci on CNBC, and CNBC keeps beating the dead horse. Bitcoin is not a safe haven because it went down this weekend as the drums were beating. But guys, we know that was all in the algorithm. We know the Fed sets up the distraction and then moves the money in the back door. We've seen the movie before, and Bitcoin definitely moves along with tech, because it's all about the fourth industrial revolution. The robots, algorithms, and drones are about to take over the economy, pay each other with crypto, and the sheep are going inside the metaverse. And we're going to have a utility bull run that's going to last about 3 to 5 years, but also go through hyper deflation at the same time. Remember, guys, we're moving to a level playing field. And we have the Fed has changed the narrative, and we know it was coming. Don't forget Jerome Powell in the fourth quarter of last year stated, hey, we're going to be lowering rates, and we saw stocks at new highs. It allowed Bitcoin and crypto to hit new highs. All we have to do is follow the Fed. And we know the Fed has to take the money out the system now in order to build this digital economy. But at the same time, we know the BRICS nations, the emerging markets, are going to be putting their foot on the gas when it comes to the fourth industrial revolution. And we have Tom Lee on CNBC. We know he's a puppet, and actually stated if we took out insurance and shelter, the numbers would be lower. But we still pay them. Why would you even take them out? Why would you even make that comment? These talking heads are hilarious. And we have Meta and Google partner. Remember, guys, there is no competition. The only people that compete with each other are the sheep. The only way you can get towards a goal is working together. And we see these big banks and big corporations pushing this digital economy. And I don't care what country you're in, they're moving forward, but they're playing the Hegelian dialectic. But at the same time, we're seeing more and more consolidation, partnerships, them working together. It used to be behind the curtain, but right now they're out in the open because the sheep are always worried about things that don't matter. And we have Colorado passing a law to protect brain waves. And that should be automatically done. Remember, guys, your thoughts are not just in the mind. And the fourth industrial revolution is all about data. And what I tell you, they're going to know you better than you know yourself. And then also, they're going to know what you're thinking. And we've seen it in plenty of movies. We will no longer have any crime, but we know with technology, and it can be used for good or evil, because we know they can put thoughts in the mind I know it sounds like a movie, but remember, guys, your life is an illusion and TV is your reality. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Quickly, the market narrative has changed from expecting a rate cut in June now to some economists saying perhaps not at all this year.
I think inflation really has a bifurcation taking place because even as the professor cited Supercore, the reason Supercore is annualizing at 8% is auto insurance. If you took auto insurance out of Supercore, the long-term average is around 2.7, and it's actually annualizing at around 2.7% right now. So the biggest driver of inflation are the two stubborn components of auto insurance and shelter. So I don't know if Williams really wants to be raising interest rates or hiking just because auto insurance rates are high. I think the one risk to markets would be that the inflation is accelerating to the point where the Fed has to hike and therefore really weaken the economy. I think that's still very much a tail scenario, but that's the one, of course, that would unsettle markets the most.
About the next frontier, Steve, of these large language models, and that is image generation, as we've heard from some others, and now we hear from Meta. What do we know?
Yeah, that's part of the Meta thing. And by the way, this is their new large language model, Scott. They're calling it Llama 3, which is, of course, sequel to Llama 2. Two really important things to know about this, Scott. First of all, it's immediately going to be deployed to billions of users who use Facebook's apps, whether that's the regular Facebook app, the WhatsApp, Instagram, and so forth. So right away, huge user base for this new Meta AI product. On top of that, there's a new relationship with Google here. Previously, they've already have a relationship with Bing, but when you ask Meta AI a question that might need to search the web or crawl the web for the exact right answer, it will either credit Google or credit Bing as the source of that. I asked Meta, what the nature of that relationship is, who's paying who, basically. They wouldn't tell me that. But it is also kind of a boost here for Google search and Bing search being tapped by the large language model made by Meta in order to get you those right answers, Scott.
A new law in Colorado aims to protect the privacy of your brainwaves. The governor signed the bill yesterday. That would expand the state's privacy law to include biological and neural data generated by the brain, the spinal cord, and the body's network of nerves. It's a move to protect consumers from neurotechnologies gathered by devices, including headbands that monitor a user's brain activity. Such devices are marketed to consumers for a variety of uses, such as treating anxiety or as a meditation coach. The companies behind such technologies have access to the records of users' brain activity, and unlike medical devices in clinical settings, data gathered by consumer-level brain technologies aren't protected by federal health laws. The Colorado law grants neural data the same protection as fingerprints, facial images, and other biometric data.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity, and as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And very much a traditionalist. I like staying with the dollar. You know that from when I was there. It's make the dollar the choice. I hate when countries go off the dollar. I would not allow countries to go off the dollar, because when we lose that standard, that will be like losing a revolutionary war. That will be a hit to our country, just like losing a war. And we can't let that happen. And too many countries now are fighting to get off the dollar. And
Cryptoteacher and the New World Order book, plus the 3 Kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.